Hi, it's Brian Decker. I want to talk about something that's been making the news recently, and that's private credit having trouble and struggles with some of their redemption requests and withdrawal requests. Why is private credit facing a sudden exodus? Well, one is because of the concentration in just a handful of sectors, particularly software, which has struggled recently with the risk of AI replacing what they do. But redemption requests surged in Q1 of this year, 2026. That means that suitability was a problem. People usually in private equity are not going to pull their funds for 5 to 10 years. So that was problem number one, is unsuitable investments. Should we be concerned? First, let's look at the banking system. But these are pretty well-known names like Cliffwater, Blue Owl, Blackstone, Apollo, Ares, Blue Owl with a Tex, Oak Tree, Morgan Stanley. Some of these names are very familiar to a lot of people. But let's focus on, number one, if the banking system is going to be affected. When we look at the total private credit worldwide, it is huge. It's 94 trillion. The total banking exposure is 540 billion. That's a tiny fraction. So the exposure is very, very small. Second, all of the bank exposure to private credit is first lien senior secured loans, giving banks priority in the event of a default. So that's why the markets are really not concerned. Banks are really not concerned about this one. The bigger issue with banks is still commercial real estate. So many people are working from home now virtually, and the ability to keep those offices full has become a major problem and is causing cash flow problems for the commercial real estate loans that banks have exposure to. So as far as private credit, not a big deal. Still watching very carefully the commercial real estate exposure on those loans with banks. So it's Brian Decker. Hope you have a great day.